Hello, listeners. Welcome to the Ensign podcast. I'm David Asiedu. I'm a commercial disputes partner in the Accra office of ENS. Today's episode is titled GRA Rules on Deductions, What's In and What's Out. You can see this as another episode of our tax audit series and how to manage an audit from a company's side of things. If you've ever wondered whether that lunch receipt or fuel bill can lower your tax bill, you are not alone. Running a business in Ghana is expensive and taxes can eat into your profits fast. The tricky part is a lot of companies miss out on legitimate deductions that could actually lower the tax they owe. And it's not just about losing money. When you skip the right deductions, you're basically handing over cash you didn't need to. Worse, if you claim the wrong things, you might end up with questions from the GRA at the audit, and no one wants that. The line between what's allowed and what's not allowed isn't always obvious. So in this episode, we are unpacking it all. What really counts as a deductible expense? What are some common mistakes to avoid? And how can your business stay compliant and tax smart? If you're a founder, director, or manager of a business, or if you're just curious, this episode is for you. To help us make sense of it all, I am joined by Cletus Banse, a partner in the tax practice at the Accra office of ENS. He's advised companies across different sectors on how to handle their tax matters in Ghana. And today, he's here to share practical insights on what businesses can and can't deduct. Cletus, welcome to the podcast.
Thank you, David. It's nice to be back on the tax audit series.
Shall we jump straight to it? My first question. So let's start with the basics. What's the general rule when it comes to deducting business expenses in Ghana for tax purposes?
Thank you for the question. The general rule for deducting an expense is whether that expense was incurred wholly, exclusively, and necessarily in the production of the income of that company. So there are three key items that must be met. That expense was incurred wholly, exclusively, and necessarily in the production of the income of the company. So that test, if it doesn't meet that test, then that expense is generally not deducted.
So wholly and necessarily, I can understand, but exclusively, you've got to imagine that the tax officials catch a lot of companies on that. I say this because in just social banter, I've heard people say families that own businesses, if you know what I mean, with adult children of their family, but older than 18, who are directors of their company, kind of can look for a conference in, I don't know, Bahamas, because that's where they want to go on holidays this year. They go and attend, the family as directors of a company, attend a conference, make expenses, although it's really a holiday they are going for, and then they come back and they can use that to reduce their taxes. I'm just saying that surely on the ground, the exclusively part of the must catch a lot of companies.
Yes, it does. That's why those key things are there. It must be exclusive. So when you go for a conference and
you have to add in Bahamas.
The Bahamas.
Yes.
And you add things that are not related.
Bungee jumping and skydiving and
to the business. Generating the income of the business. Then the aspect, the expense that relates to those aspects that are not related to the company generating the income will be excluded. For example, if you are going for the conference which is very necessary for the business, and you add your son, who has no role and will not do anything in relation to that conference to enable the company in income, then the expense relating to your son joining you to the conference will be excluded.
What if your son is an employee in mid-management?
It doesn't.
Then it changes things a little bit, doesn't it?
It changes, but it still must, that the son must be that employee. You can even take the son out and take another employee. The employee who is attending, there must be evidence that his role is important and is needed in that conference to enable the company in its income. So it's not just carrying employees for social or just to
mixed purposes.
Exactly.
So there's been a lot of talk about the new guidelines on expense deductions. What exactly are these guidelines and what do they change, or what have they changed?
So we've been going on with this wholly, exclusively, and necessarily test, and what we call it the when rule, for some time. Then in March 2024, the tax authorities, that's GRA, introduced new guidelines on what the things that you must do to be able to deduct an expense. And this new guidelines is that for an expense to be deductible, it must be supported by a VAT invoice. So if they come and you say you purchase a table, then that expense, you must be able to produce a GRA approved VAT invoice to back that expense. There are exceptions, but we will get there.
So I have tried, seeing as I don't understand taxes, I've tried to read the guidelines, and this insistence on receipts and all. If there's a business that sends its, I don't know, even a law firm that sends its associates to court, to regulators and all, and they take taxis. You know that taxis don't give receipts in Ghana, but it's obviously not a lie that they send their associates. They mightn't be able to take an Uber all the time, because an Uber does give you a receipt even by email and all. How will that be navigated?
Yes, so this is where the exceptions come in. So first of all, if the person from whom you have procured a service or goods is VAT registered, then the general rule is that the expense must be backed with a VAT invoice. However, where the service or goods procured are exempt under the VAT Act, and when you take the VAT Act, you go to the first schedule, you see the list of goods or services that are exempt from VAT. So if that service or goods is exempt, then you are not required to produce a VAT invoice to support it.
So does it mean that the tax man has almost no choice but to take your word for it?
No, you still have to. If you procure,
I say that I spent 50,000 on taxi rides for my employees to go to customers.
The tax man has a way of verifying that expense. That if how many employees do you require to go to that particular place, and then is the amount involved reasonable? Is it something that a business will generally incur in running such an errand or going to a place of that nature? So they have various mechanisms of testing that.
Since you gave the example of the VAT exemption as an exception to the general rule, let me ask you this question. Some small businesses aren't even registered for VAT, as we know. Will these rules hurt them more than help?
So it was one of the things that's generated a lot of controversy in this area, that the VAT Act sets thresholds for persons or businesses to register. So you have businesses who, and the threshold is that your annual turnover should be in the region of 200,000 Ghana cedis. So if you're a business and your annual turnover is below that, you are not by law required to register. But you are entitled to carry on your business, and people must patronize your business. So if I go and buy an item or procure a service from a person who falls below that threshold,
yes,
it's a legitimate expense. So the way the guidelines have regulated this is that if the service or the goods you have procured are not exempt, that is, they are vatable, then the burden will be on you to provide evidence that the person from whom you have procured that service or goods falls below the 200,000 threshold and is not required to register for VAT.
Is this another way of saying that if you are buying stuff from people, be sure to check if they are VAT registered, and if you think they should be but they are not, then maybe go down the street and buy from the other person who is VAT registered?
Exactly. So it's one of the things that comes up. And then the guidelines actually says that you should consider the amount involved.
Yes.
So if you are procuring goods worth 500,000 or 300,000 Ghana cedis, it should, occur to you that then that business must be VAT registered. Yeah. So you should be obtaining a VAT invoice.
Okay, that's interesting, I think. So what about expenses that have nothing to do with VAT? Because VAT has kind of been prominent in the discussion so far. So what about expenses that have nothing to do with VAT, like salaries or regulatory fees? How are these treated under the new?
Yeah, so those are some of the exemptions that are allowed, because you have the examples you mentioned, salaries, and those are not backed by any VAT invoices. So the general rules will apply. The general rules on the deductibility of expenses will apply.
Can you provide a couple of other examples that fall in the same category?
So if you take your repairs and improvement, and then we have
to equipment,
repairs, interest, like this. If a company incurs interest from borrowing and so taking a loan, finance the business, that interest is deductible, and that interest is not required to be backed by a VAT invoice. So all you need,
because the contract, the facility agreement with the bank will speak for itself.
Exactly. So all you need to do is to provide the loan agreement and then provide evidence that the loan was procured for the purpose of running the business.
Yes.
And then you have satisfied that and the interest will be deductible.
So I want to ask you a big picture question. Do you think these guidelines will make the tax system better, or will they just make life harder for businesses?
Usually, rules tend to create initial issues for businesses.
Yeah.
But with time, businesses will adjust and then fall in line. And it is my expectation that now businesses become aware that if you are procuring goods or services, you have to be mindful from the person from whom you procure that goods or service. Then sooner than businesses will fall in line and everything will work smoothly. So I think the guidelines will work.
Okay, I think this is a good place to end this one, short and sweet. Is there anything you'd like to land on as your parting words on this topic?
Yes, I will. I will encourage small businesses to try and check and see if they fall within the threshold to register. Because now, if you fall within that threshold and you are not registered, you may turn away some customers because nobody will want to come and procure goods or services from you if they cannot get a VAT invoice to be able to deduct that expense. So it is in your interest to register for VAT to be able to get all the customers that you need.
Okay. Listeners, thank you for tuning in to the Ensign podcast. Understanding what you can and cannot deduct is not just a tax issue, it is also a business survival issue. Big thanks to Cletus Banse for breaking it down so clearly. If you found this helpful, share it with someone who runs a business or handles company finances. And if you have questions or ideas for future episodes, we'd love to hear from you. Until next time, stay savvy, stay compliant, and keep building smart. Thank you.